Welcome to our deep dive today. We're going deep into Dropbox's world, specifically their Q3 2024 Form 10Q. It's basically their financial report card out there for the public to see. We've got all sorts of stuff in here. We've got numbers, of course, management commentary, even a little peek at what worries them the most. Our mission today is, well, to figure out a few things. First, where does Dropbox actually stand right now? Second, where are they headed? What's a direction? And third, what does all this mean for you? Whether you're an investor, a tech enthusiast, or just curious about the future of work in general.
Yeah, it's really interesting. Companies like Dropbox, they have to lay out their risks pretty clearly right here in these reports. It's a legal requirement. So we get this sort of glimpse into what keeps them up at night, so to speak.
All right, so let's set the scene. Everything we're talking about today is based on Dropbox's financials as of September 30th, 2024, with just a few little updates from stuff that happened after that date. Now, I gotta admit, I was kind of surprised when I saw this. The sheer scale of their stock situation. Over 231 million shares of their Class A common stock just floating around out there as of November 4th, 2024. But here's the really interesting thing. Buried in those millions, there's this detail about 8.2 million shares that are tied to the co-founder.
Oh, that's right. So those shares, they vest, meaning he fully owns them. But it's based on two things. Time passing, of course.
Yeah.
But also the stock hitting certain price targets. It's a pretty unique setup, linking his compensation directly to the company's long-term performance.
Wow, so it's not just about time served. It's about actually driving the stock up. Talk about motivation. And then on top of that, we've got almost 79 million Class B shares. And those have super voting power. It's like they get more votes than the regular shares do when it comes to making decisions about the company. It's direction.
Yeah, that's a great point. It really highlights how control works. In a company like Dropbox, you might have millions of shares out there, but the power to steer the ship can be pretty concentrated in specific hands.
For sure. Okay, so speaking of potential obstacles, let's move on to what Dropbox themselves are worried about. And who better to tell us than Dropbox, right?
Right. Well, they actually spell out some major risk factors right in their report. Some of them pretty obvious, of course, like keeping their current paying users happy. Making sure they stay subscribed. That's the foundation, right? Their whole subscription model depends on that.
Makes sense. You can't build a business on churn, right? But attracting NEW paying users, though, that seems like a big one, too. Especially these days. The tech world is getting more competitive every day.
Oh, absolutely. It's not enough to just hold on to your existing customers. You need to be constantly growing to stay ahead of the game. And then, of course, you've got the ever-present threat of cybersecurity breaches. I mean, remember that incident Dropbox had back in April 2024.
Yeah, that was a wake-up call for a lot of companies. In a world where everything's digital, data security is a huge deal. Any little slip-up can have serious consequences, both for the company and for its users. So we've got a sense of what keeps Dropbox up at night. But how are they actually performing, in the cold, hard light of day?
Well, the overall trend is positive. Their revenue is up compared to the same period last year, both for Q3 and the first 9 months of 2024. However, Dropbox themselves admit that this growth is slowing down, especially when you look at their team's plans.
Oh, that's interesting. 2% growth for the first 9 months of 2024. That's a pretty big drop from what they were seeing before. It sounds like businesses might be tightening their belts while individual users are still willing to shell out for that extra storage, huh?
Yeah, that seems to be the case. But here's what's fascinating. Dropbox is making more money per user, their ARPU, or average revenue per user. It's up.
So they're squeezing more dollars out of each paying customer.
Precisely. But this raises a really critical question. Can they keep that up if they're not bringing in new users at a healthy rate? It's a bit like filling up a leaky bucket. You can pour more water in. But if the holes aren't plugged, you're still going to lose it eventually.
Yeah, that's a great analogy. Okay, so some growth, but some warning signs too. Now let's talk about how they're adapting to this changing landscape. Back in 2020, Dropbox made a pretty bold move, I think. They went virtual first, basically shifting their whole work model to being remote.
Right. This was pretty unusual at the time. A lot of companies were just scrambling, to figure out the whole work from home thing. But Dropbox just jumped right in at first, And here's the interesting part. They're still committed to this approach, even now, all these years later.
That's really interesting. So what impact has this virtual first model had on their operations, the day-to-day stuff?
Well, for one thing, it's led to some major downsizing of their real estate. They're saving money on offices. Yeah. But they're still focused on creating spaces for collaboration. They've got these Dropbox studios and these on-demand spaces that employees can use.
It sounds like a hybrid approach. A bit of remote work, a bit of in-person interaction.
Right, exactly. And it really makes you wonder, is this the future of tech companies? Or will we all be back in cubicles someday?
Time will tell, I guess. But speaking of big changes, Dropbox also made headlines recently when they announced a significant workforce reduction back in October 2024.
Oh, that's right. And remember, this was after the period covered in this report. They let go of about 20% of their employees, which is a huge move for any company.
Wow, 20%, that's a big deal.
Yeah.
It seems like they're really serious about streamlining their operations.
To boost profitability,
Yeah.
right? And also aligning their workforce with that virtual first strategy.
Absolutely, and it's not just about cutting costs either. They're also making strategic acquisitions. They recently bought Reclaim, this AI-powered calendar assistant. So they're not just a cloud storage company anymore. Are they betting on AI to set themselves apart from the competition?
It's certainly a fascinating development. It suggests they're thinking about the future of work and how AI can play a role in making people more productive.
All right, so we've got a company showing some growth, but also facing challenges. They're making bold moves with their work model, their workforce, and their investments in AI. Now, let's dive into some of the finer details of their financials. There are some interesting nuggets buried in here that might not make headlines, but they tell us a lot about how Dropbox operates.
I love digging into these details, like being a financial detective. Yeah.
Exactly. For example, they have a lot of cash and investments,
Right.
right? But a big chunk of it is in something called short-term securities. Now, to be honest, I had to brush up on what that actually means. Turns out these are investments meant to be held for a short period, usually less than a year. Think of it like parking your money in a savings account, but maybe with a slightly higher potential for returns.
Right. And what's interesting here is that as of September 30th, 2024, Dropbox held 219 of these short-term investments that were actually in an unrealized loss position.
Hold on, unrealized loss. Break that down for me.
Sure. It basically means that if they sold those investments on that specific date, they would have lost money compared to what they originally paid for them. However, since they're holding on to them, the loss is only on paper. It's not an actual loss until they sell.
Okay, so it's like they bought some stocks, and those stocks are currently down, but they're hoping it'll go back up.
Exactly. And this raises some interesting questions. Like, what does this say about their investment strategy, especially in a volatile market like this one? Are they playing it safe, or are they taking on more risk than we might expect? It's definitely something to keep an eye on.
It's like they're playing the stock market, but with a significant portion of their cash reserves. And speaking of things that investors should be aware of, Dropbox also has some debt in the form of convertible senior notes. I know that sounds a bit jargony, but it's actually a pretty common way for companies to raise money.
Right. These notes are essentially loans, but with a twist. They have the potential to convert into shares of Dropbox's stock later on down the road.
So if those notes convert into stock, it could mean that each share of Dropbox would represent a slightly smaller
Ownership of the company, right?
Exactly. It's something investors need to factor in when they're evaluating the company's financial health.
And then there's that unique compensation structure for the co-founder, the one we talked about earlier, tied to stock performance. It's designed to incentivize him to focus on the long term. But is it actually working?
It's a fascinating case study. It shows how different compensation models can have a real impact.
On a company's trajectory?
We've covered a lot of ground here. It seems like Dropbox is at a crossroads. They're facing pressures from the slowing economy and a crowded market. But they're also making bold moves to adapt and evolve this virtual first model, the workforce reduction, the AI acquisitions. It all suggests they're trying to reinvent themselves for the future.
And that future is becoming increasingly digital, interconnected, and reliant on AI.
We'll delve deeper into these questions in the next part of our deep dive. We'll explore their revenue recognition policies, their cost management strategies, their international presence, and even their legal battles.
It's going to be a fascinating journey into the complex world of a tech giant, trying to navigate the ever-changing currents of the global economy.
Stay tuned, deep divers. Welcome back to our deep dive into Dropbox's financial world. I'm really starting to see how much information is packed into this Form 10Q. It's like a treasure trove of clues about how the company actually works.
It's true. And one of the most important clues we can look at is their revenue recognition policy. It might sound a bit technical, but it's crucial for understanding how Dropbox actually makes money.
Okay, revenue recognition. Break it down for me. What's the big deal?
Well, Dropbox makes most of its money from subscription fees, right? But they don't just count all that money as soon as someone subscribes.
So they don't just get a big lump sum up front and call it a day.
Exactly. They recognize that revenue over the entire length of the subscription. This is called ratable recognition, meaning they spread it out over the life of the contract. It's kind of like paying rent for an apartment. You pay monthly for the ongoing benefit of living there, not a huge sum all at once.
That makes sense. So how does this relate to the slowing growth we talked about earlier?
Well, this ratable recognition means Dropbox can't just bank on those big upfront payments. Each new subscription only gradually adds to their revenue, making steady user growth even more crucial. If they're not adding new subscribers quickly enough, it's going to be hard to keep that revenue engine humming.
Okay, so getting new users is key. But let's talk about the money they already have coming in. We know they're making more per user, but how are they actually spending those dollars? We touched on infrastructure costs before, but let's dig a little deeper.
Sure. A big chunk of their spending goes towards their cost of revenue, which includes things like keeping their servers running, paying rent for their data centers, and handling all the bandwidth needed to keep those files moving around the internet. But it's not just about the hardware. It also includes the salaries of the people who support that infrastructure and provide customer support.
So it's not just the physical stuff, it's also the brain power behind it.
Exactly. And then there are other costs like credit card processing fees and general overhead. All these expenses eat into their gross profit, which is essentially what's left over after you subtract those costs from their total revenue.
So the higher their costs, the lower their profit. Makes sense. So how are they managing those costs, especially with the slowing growth we talked about?
Well, we already mentioned the workforce reduction, which will certainly have an impact. But they're also being strategic about how they invest in research and development, the area where they develop new features and improve their products.
They mentioned in the report that they expect their R&D costs to decrease as a percentage of revenue, both in the short term and the long term.
Right. And that's partly because of the layoffs, but also because they're focusing on specific roles and projects that are critical for their future growth initiatives. They're trying to do more with less, essentially. It's like pruning a tree to make it stronger and more focused.
I like that analogy. They're streamlining their efforts, trying to make sure every dollar counts. And speaking of dollars, it looks like they're generating income from sources other than just subscriptions. What's the story with their interest income?
Well, remember all that cash and short-term investments we talked about earlier. That money isn't just sitting there doing nothing. It's actually generating interest income, just like a savings account.
So it's like passive income from their assets.
Precisely. They've also got other sources of income, like sublease income from those downsized offices. They lump all these non-operating gains and losses together into a category called other income loss, net.
So it's kind of a catch-all category for anything that doesn't fit neatly into their main revenue streams.
Exactly.
Yeah.
Now let's talk about taxes. I know it's not the most exciting topic, but it's crucial for understanding their overall financial health.
All right, let's get our tax hats on. What do we need to know?
Well, first off, they're subject to income taxes in both the United States and various other countries where they operate. And their effective tax rate, the percentage of their profits they pay in taxes, can fluctuate depending on the mix of earnings and losses they have in different countries.
So it's not as simple as just paying a flat rate across the board.
Nope, taxes are rarely that straightforward. And things get even more complicated when you factor in things like net operating loss carryforwards and tax credits. These are basically like coupons that companies can use to reduce their future tax liabilities.
So it's like getting a discount on your taxes.
It's exactly. Dropbox has accumulated some of these over the years, which could help them save on taxes in the future. But there are limitations on how much they can use each year, and they might not be able to use all of them before they expire.
So they have to be strategic about using those tax benefits. It's a use it or lose it situation.
Precisely. And then there's the whole issue of international tax laws, which are constantly evolving. The OECD, the Organization for Economic Cooperation and Development, is pushing for changes that could significantly impact multinational companies like Dropbox.
Okay, the OECD. Remind me what that is again.
It's basically a club of mostly wealthy countries that work together on economic and social issues. And one of their big focuses right now is tackling tax avoidance by big companies that operate in multiple countries.
So they're trying to close loopholes and make sure everyone's paying their fair share.
That's the idea. One of their key proposals, called Pillar 2, aims to establish a global minimum tax rate of at least 15% for large companies.
So no matter where a company operates, they'd have to pay at least 15% in taxes.
That's the goal. And while it's not expected to drastically affect Dropbox's effective tax rate anytime soon, it's something they're definitely keeping an eye on. It's like a storm brewing on the horizon. They might not feel the full force of it yet, but they know it's coming.
That's a great analogy. So we're seeing that analyzing financial statements isn't just about looking at numbers. It's also about trying to anticipate future trends and challenges.
Exactly. And speaking of challenges, one thing that really stood out to me in this report is how transparent Dropbox is about their risk factors. They don't shy away from the potential problems they face, both within the company and in the wider world.
Yeah, they're upfront about the things that could go wrong. I actually find that refreshing. It feels more honest than some other company reports I've seen.
I agree. It gives you a much more realistic view of the company and its prospects.
Mm.
For example, they openly acknowledge the risks associated with their virtual first model.
Right. They admit that it's new territory and that there could be unforeseen challenges along the way. What if it impacts employee morale or makes it harder to maintain their company culture?
Exactly. They also highlight the risks associated with their reliance on third-party software and services. Any disruption or security breach in those systems could have a ripple effect on Dropbox's operations. It's like a chain reaction. One weak link can bring down the whole system.
They're also not immune to the broader economic forces at play, things like inflation, recession, and geopolitical instability.
Right. They're operating in a complex world with a lot of moving parts. And that brings us back to the big question. Can Dropbox navigate these challenges and come out stronger on the other side?
Or will they get swept up in the tide of change? It's a question we'll continue to explore in the final part of our deep dive. Stay tuned. Welcome back, deep divers. We're in the final stretch now of our exploration of Dropbox's Q3 2024 Form 10Q. It's been a fascinating journey so far, uncovering both the challenges and the opportunities facing the company.
It really has. We've covered their financials, their risks, their virtual first model, and those cost management strategies. But there's one more piece of the puzzle I think we need to look at before we wrap up.
Oh, what's that?
Dropbox's global reach.
Right. It's easy to think of them as just a Silicon Valley company. But they have users all over the world, right? That international presence has got to be a huge factor in their overall strategy.
Oh, absolutely. Expanding globally can unlock massive growth opportunities.
Yeah.
But it also comes with its own set of complexities.
Yeah.
You know, different countries have different regulations, different cultures, different economic conditions. Navigating that landscape effectively is a big challenge.
So paint me a picture. What does Dropbox's global footprint actually look like right now?
Well, according to their report, they generate a pretty substantial portion of their revenue from outside the United States. In fact, for the 9 months ending September 30th, 2024, international sales were 44% of their total revenue.
Wow, that's a big chunk of change coming from overseas. Do they break down their revenue by specific countries?
Not in this particular report. They do mention, though, that no single country outside the U.S. accounted for more than 10% of their total revenue during that period. So their international revenue is pretty well spread out.
That's good, right? It means they're not overly reliant on any one market if things go south somewhere. But I imagine operating globally also exposes them to a lot of currency risk, doesn't it? The value of the U.S. dollar compared to other currencies is always fluctuating.
Exactly. When the U.S. dollar strengthens against other currencies, it can actually hurt their revenue when they convert it back into dollars. And we've seen some pretty wild swings in currency values recently.
It feels like the global economy is on a bit of a roller coaster ride these days. So how is Dropbox handling this currency risk? Are they doing anything to protect themselves?
As of right now, they're not actively hedging against currency risk.
So no fancy financial tools to lock in specific exchange rates?
Not that they've disclosed in the report.
So they're riding the wave, taking the ups and downs as they come.
That seems to be their approach. They acknowledge that currency fluctuations can impact their results, but they haven't implemented any formal hedging strategies yet.
Interesting. Maybe they're hoping their diversified revenue streams will help cushion the impact. Or maybe they're waiting for the currency markets to calm down a bit before making any big moves. Who knows? Maybe they have a brilliant team of currency strategists working behind the scenes.
It's certainly possible, but it's definitely something to keep an eye on if you're following Dropbox's performance.
For sure. Okay, so speaking of things to watch, they also mentioned some interesting legal matters in their report, specifically a patent infringement lawsuit filed against them by a company called Motion Offense.
Oh, right, the patent dispute. Patent disputes are pretty common in the tech world, aren't they?
Yeah.
It's a constant battle over intellectual property. So what's the latest on that case?
Well, a jury actually ruled in Dropbox's favor back in May 2023, finding that they didn't infringe on Motion Defense's patents. But, as with many legal battles, things didn't end there.
I was going to say lawsuits rarely have a clean ending, so what happened next?
Well, Motion Defense tried to get a new trial, but the court denied their request in January 2024. Then Dropbox pushed for a final judgment in their favor, which the court finally granted in August 2024. But Motion Defense appealed the decision.
Wow, talk about persistence. So this legal saga is far from over, huh?
It certainly seems that way. They filed another motion for judgment and asked for yet another new trial. As of the date of this filing, Dropbox has responded, but the case is still ongoing.
So it's a real nail-biter, huh?
Wow.
Even when you win in court, you haven't necessarily won the whole war. Legal battles can be so costly and time-consuming, even if you're in the right.
Totally.
Right.
And this one seems far from over.
Well, we've covered a lot today, haven't we? It's been a real eye-opener.
It has. We explored their financial performance, their strategic moves, their risks, their global presence, even their legal challenges. It's been fascinating.
I agree. I always find it so interesting to peel back the layers of these reports, to see how a company is truly operating.
So what does all this mean for our listeners out there? What are the key takeaways from our deep dive?
I think the biggest takeaway is that Dropbox is at a pivotal moment. The slowing economy is creating headwinds, competition is fierce, and their virtual-first model is a bold experiment with unknown outcomes.
But they're not standing still. They're actively streamlining their operations, investing in AI, and expanding their global reach. They're clearly not afraid of making tough decisions and taking calculated risks.
Exactly. That recent workforce reduction is a clear sign of that. And their acquisitions, like that AI-powered calendar assistant Reclaim, suggest they're thinking seriously about the future of work and how technology can shape it.
It's a classic story of disruption and reinvention. The tech world never stands still, does it? And companies like Dropbox have to constantly adapt and innovate to stay relevant.
It's true. And that's the million-dollar question, isn't it? Can Dropbox successfully navigate these challenges and emerge as a leader in the next era of technology?
We'll have to wait and see. But thanks to this deep dive, we have a much better understanding of the forces at play and the strategic decisions that will shape their future.
Absolutely.
Yeah.
It's been a pleasure exploring these fascinating documents with you and with our listeners.
And remember, folks, this is just a snapshot in time. Dropbox's story is still being written. So keep your eyes peeled for their future filings, their product announcements, their acquisitions. You never know what surprises they might have in store.
Until next time, happy exploring.